Imagine a company that sits, well, right at the very heart of the global clean energy transition. It's powering everything from our homes to uh, the massive demands of artificial intelligence.
Yeah, and its valuation has just soared, reflecting huge optimism.
Exactly. But it really begs the question, has the market gotten ahead of itself here? Is this company, truly worth its current price? Or is there maybe a disconnect between that exciting story and the actual numbers?
That's what we're unpacking today. We're doing a deep dive into Cameco Corporation, NYSE tickers, CCJ.
We're looking at a pretty comprehensive report, information as of July 12th, 2025, with the share price sitting at $72.70.
Right. Our mission is to dissect every facet, the business, management, financials, market position, everything, really.
Yeah.
We want to pull out the key insights so you, the informed learner, understand what's really driving the value here.
Okay, so we've got a clear plan. We'll break this into two main parts. First up, the foundations.
Yep. Business understanding, management evaluation, financial analysis, the core stuff.
Then we'll switch gears a bit. We'll look at market sentiment, the ownership structure, a full risk assessment, and wrap it all up with our conclusion.
Sounds good. Let's jump in.
All right. Chapter 1, business understanding. So when we talk about Cameco, what are we really looking at?
Well, fundamentally, it's seen as a pure play investment for nuclear energy demand. But they're much more than just, digging uranium out of the ground.
Right. It's an integrated approach, isn't it? From exploration and mining all the way to sophisticated fuel services.
Exactly. Ensuring that secure global supply chain, their strategy really rests on three pillars.
Which are?
Disciplined, long-term contracting, locking in that revenue. Profitable Tier 1 production, getting the most out of their best assets. And financial prudence, keeping the books solid.
Makes sense, but there was a big shift recently, wasn't there? Something that changed the game.
Oh, absolutely. The big aha moment was the 2023 acquisition of a 49% stake in Westinghouse Electric Company.
Westinghouse, right. How did that change things?
It totally transformed Cameco. They went from being just a fuel supplier to a strategic partner involved in the whole nuclear life cycle. We're talking reactor tech, engineering, design, aftermarket services, the works.
Wow, so they get insight into the whole process now.
An unparalleled line of sight, as the report puts it. They can see future reactor construction plans, which helps them anticipate fuel demand way down the line. It's a huge advantage.
So how does this break down in terms of revenue?
Three main segments now. First, the uranium segment, still the core driver, mining, milling, selling yellow cake, mostly under long-term deals.
Okay.
Second, fuel services. This is the value add part. Refining uranium, converting it into specific fuel types like UF6 or UO2. They're actually one of only 4 Western commercial suppliers of UF6 and the only commercial supplier of natural UO2 for CANDU reactors.
That's quite a niche.
It is. And third, the new kid on the block, the Westinghouse segment. Already a massive contributor, over $2 billion last fiscal year. That covers reactor design, maintenance components, basically servicing about half the world's nuclear fleet.
That's incredible growth. And they have future aspirations too, right? Something about enrichment.
Yeah, through their interest in global laser enrichment, or GLE, and the Silex laser technology. That could potentially position them across the entire nuclear fuel value chain eventually.
Okay, let's talk scale. How big is Cameco in the grand scheme of things?
They're giant.
Yeah.
Consistently one of the world's largest uranium producers, like 15–18% of global mine production. They run the world's largest high-grade mine, MacArthur River, and the largest mill at Key Lake.
And the asset base itself.
Huge. Licensed annual capacity over 53 million pounds of U3O8 and proven and probable reserves of 458 million pounds. These are world-class assets.
And their role in the Western fuel cycle. You mentioned UF6 and UO2.
Dominant. They've got the world's largest uranium refinery, one of only 3 Western commercial conversion suppliers. Add Westinghouse, and management calls it a vertically integrated Western nuclear champion. They basically say almost all Western nuclear activities now touch Cameco's operations somehow.
Financially, what kind of scale are we talking?
Market cap around $31.6 billion as of July. That makes it the 693rd most valuable public company globally, a major player in basic materials.
So, summing up their value proposition for investors
is that vertically integrated nuclear pure play, direct, broad exposure to the whole nuclear growth story.
For their customers. Utilities, I imagine.
Absolutely. It's security of supply. Coming from politically stable Canada, that's a huge deal for Western utilities trying to de-risk their supply chains away from, let's say, less stable regions.
And the bigger picture, global impact.
They position themselves as an enabler of the clean energy transition. Fueling carbon-free, reliable nuclear power fits right into global decarbonization goals. Plus, they emphasize ESG, partnerships with communities, environmental stewardship, all part of long-term value.
Okay, let's widen the lens to the industry. What's happening in the nuclear space?
We're definitely seeing what people call a nuclear renaissance, especially after the post-Fukushima downturn. The IEA projects global nuclear generation will hit an all-time high in 2025.
And that COP28 pledge.
That's the really big one. A landmark pledge to triple global nuclear capacity by 2050. That's a massive multi-decade tailwind for the whole sector.
What's driving this demand surge?
Well, beyond just clean energy goals, there's this unprecedented demand coming from AI and data centers. They need huge amounts of reliable, clean power. Tech giants like Amazon, Microsoft, they're signing long-term deals.
Interesting. And what about SMR's small modular reactors?
Huge potential there. Over 80 designs being worked on. They promise more flexible, scalable, maybe even cheaper nuclear power. We're expecting key investment decisions on these around 2025. That could really open things up.
And the uranium market itself? Supply and demand.
There's a clear structural supply deficit. Demand is set to outstrip known supply by something like 1.3 billion pounds over the next 20 years. That fundamental imbalance is why analysts see the market growing significantly and expect spot prices back in the $9,100 range by mid-2025.
Who are Cameco's main competitors?
It's a concentrated field. You've got big state-owned players like Kazatomprom from Kazakhstan and Orano from France. Cameco is really the dominant private player.
Yeah.
Then there are smaller developers.
How does Cameco compete?
On cost, thanks to those Tier 1 assets.
Yeah.
Geopolitical stability, that Canadian advantage, and their integrated supply chain.
And regulations. Must be tough in this industry.
Oh, incredibly stringent. International bodies like the IAEA, federal agencies in the U.S. and Canada, provincial authorities. High compliance costs are a massive barrier to entry.
So those barriers are pretty high then.
Exceptionally high. You need billions in capital for mines and mills, specialized tech and expertise, especially downstream for conversion and enrichment. Permitting takes years, sometimes over a decade. Plus, you need that social and political acceptance. It's not easy to break into.
Which really highlights Cameco's competitive advantage, right? Their brand, for instance.
Absolutely. Global brand recognition for quality, reliability, synonymous with security of supply, because they're Canadian, a geopolitical safe haven for Western buyers.
And cost advantages. You mentioned the mines.
Yeah. McArthur River, Cigar Lake, world's largest, highest grade deposits. That means significantly lower production costs. Plus, running the world's largest refinery and a top conversion facility gives them huge economies of scale.
Is there anything surprising about their advantages?
I think the brownfield leverage is pretty unique. They operate at only about 70% of their licensed capacity.
Meaning
Meaning they can ramp up production relatively quickly and cheaply from existing permitted sites when prices justify it. Most competitors would have to build new mines, which takes years and billions. That flexibility is key.
What about keeping customers? Switching costs?
Very high. Nuclear fuel contracts are long, 7–10 years typically. Utilities prioritize reliability above almost everything. The Westinghouse deal deepens this massively. It creates an integrated ecosystem, building relationships, cross-selling. It shifts Cameco's moat from just being a low-cost producer to being an embedded strategic partner.
And their assets are truly unique.
Irreplaceable geological deposits. And they're one of the very few Western companies, the only publicly traded one, really with proven capabilities across mining, milling, refining, and conversion, now bolted onto Westinghouse's reactor expertise.
So what does all that strength allow them to do strategically?
It gives them patience. They have the financial muscle and asset quality to actually curtail production when prices are low. They can influence the market, act as a price maker, not just a price taker. That's a powerful position.
Okay, let's pivot. Chapter 2. Management evaluation. How does the leadership team stack up?
Very seasoned. CEO Tim Gitzel, CFO Grant Isaac, COO Brian Riley, they've steered the ship through some rough waters, the bear market years, and led this current resurgence.
How's their recent track record, like 2024?
Strong. Good financial performance, record production at McArthur River Key Lake, which, interestingly, was thanks to countercyclical investments in automation they made during the downturn.
A smart move.
Yeah. Plus, successful Westinghouse integration, keeping debt in check. They've executed well.
How do they handle crises? Any examples?
They seem effective. They kept production going during major wildfires in Saskatchewan in June 2025, and they resolved a production halt at their Inkai joint venture in Kazakhstan back in January 2025. Shows good contingency planning and ability to navigate tricky geopolitical stuff.
And communication, transparency, ethics.
They seem committed. Comprehensive sustainability reports, detailed investor comms, clear risk disclosures. They talk a lot about integrity, human rights. CEO Gitzel often acts as a kind of industry voice for governments, which boosts their reputation and influence.
Let's talk capital allocation. Where are they putting their money?
It's a long-term view. They invested heavily in optimizing those core assets, even when the market was weak. And the Westinghouse deal wasn't just opportunistic, it was deeply strategic for that vertical integration. They seem disciplined about future M&A too.
What about returning cash to shareholders? Buybacks? Dividends?
No real buyback activity lately. The focus is clearly on the dividend. They raised it from 12 cents in 2023 to 16 cents in 2024.
And plans for more?
Yes, management explicitly plans to increase it further in 2025 and 2026, aiming to double the 2023 level to $0.24 by 2026. It signals confidence and a focus on building resilient income-generating company long-term.
How about profitability metrics like ROIC, return on invested capital?
It came in at 4.36%, with RECE at 6.06%.
Yeah.
Now, that might sound modest on its own,
Right.
but for a capital-heavy industry just coming out of a major downturn, it's actually significant. It shows they're now generating returns above their cost of capital as they ramp up into this better pricing environment.
Okay, time for Chapter 3, financial analysis. Let's hit the key metrics. Market cap.
Still around $31.64 billion as of July 25, a solid large cap leader.
Revenue growth. You mentioned it was accelerating.
Dramatically, the 5-year average annual rate is 12.3%.
Yeah.
But look at recent years, up 22% in 22, 33% in 23, 19% in 24. Trailing 12 months to March 25 is $2.37 billion. That's strong momentum.
And profit margin.
Big expansion there, too. TTM gross margin is 35.4%, way up from under 16% back in 2021. TTM operating margin 16.25%, huge turnaround from being negative.
Margin.
TTM net profit margin is 7.5%. It dips slightly from the prior year's 9.3%, but the report notes that's mostly due to non-cash accounting impacts from the Westinghouse deal, not weaker operations.
Free cash flow. That's crucial.
Exceptionally strong inflection here. Went from negative $15 million in 2020 to positive $396 million in 2023, and then $507 million in 2024. Clear shift to robust cash generation.
What about financial stability? Earnings consistency.
Well, being a commodity producer, earnings are inherently cyclical and volatile. They went through that tough nuclear winter post-Fukushima. The 10-year summary really shows that dip in the powerful recovery.
But the recovery has been strong.
Very strong. Average annual earnings growth over the past 5 years is nearly 50%. Shows the upside leverage, but also highlights the cyclical risk.
Balance sheet strength. Bet.
Like a fortress. Very low debt-to-equity ratio, 0.15 or 15.3% as of March 25. They've actively managed it down, even while doing the Westinghouse deal.
Short-term liquidity. Current ratio. It's super strong at 2.71. Plenty of liquid assets to cover short-term liabilities. About $1.5 billion versus $555 million.
And the dividend. Stable. Growing.
Definitely stable and now growing. History of returning capital increases from 0.08 cents to $0.12, now the 8/16 cents. It's well covered by earnings payout ratio around 21%, and management is signaling more increases.
Oh, okay, now the big one. Valuation analysis. Price to earnings ratio.
This is where it gets really interesting. The TTM-PE ratio is somewhere between 177 and 182.
Wow. 177. That sounds...
Sufficiently expensive. Yeah.
How does that compare historically for Cameco? Or to peers? It's at the extreme high end of its own historical range levels it rarely sustains. And compared to, say, diversified miners like BHP with a PE of 11 or Vale at 7, it's a massive premium. Most other pure-play uranium companies aren't even profitable, so they have negative PEs.
So what does that PE tell us? Why so high?
It's a huge signal. The market is not valuing Cameco on what it earned last year or even this year. It's betting on massive, sustained earnings growth for many, many years. It reflects this deep conviction in the whole nuclear renaissance story.
Okay, so relative valuation looks stretched. What about intrinsic value? Did you look at a DCF?
We did. A discounted cash flow model tries to estimate value based on future cash generation, discounted back using a weighted average cost of capital, or WACC. Usually a two-stage model, high growth, then a terminal value.
And what did the educational model suggest?
Based on assumptions like 28.6% annual EPS growth for 5 years, 3% perpetual growth, and a 9.5% discount rate, the estimated intrinsic value range came out between $55 and $75 per share.
$55 to $75. But you mentioned assumptions are key.
Critically important. And here's the aha moment on valuation. DCFs are super sensitive. An alternative third-party DCF analysis cited in the report calculated just $22.80 per share.
Wow, $22.80 versus $55.75. That's a huge difference.
Exactly. It just hammers home how the assumptions drive the outcome. That wide disparity is crucial to understand.
So even the more optimistic DCF puts the value near the current price. What's the main takeaway on valuation?
There's a definite disconnect. The market price seems to include a significant narrative premium. It's baking in the AI energy boom, tripling nuclear by 2050, Cameco being the secure Western supplier, all these powerful themes.
So as an investor today,
You're paying for solid fundamentals, yes, but also for this compelling yet less tangible narrative. The big risk is what happens if that narrative stumbles. Even if the company itself keeps performing well operationally, the multiple could compress rapidly.
okay, that sets us up nicely for Chapter 4, market sentiment. What's the feeling out there? Analysts.
Overwhelmingly bullish. Consensus is a buy, about 55% rated, strong buy, another 36% buy.
Price targets?
Average 12-month target is around $79.50 to $80.60, suggesting maybe 10–11% upside from the current $72.17. But there's a wide range in those targets, from $65 all the way up to $100.
And the media, news flow.
Exceptionally positive general tone. Lots of headlines like, "Why Cameco stock blasted higher." Media consistently plays up favorable legislation, tech sector demand, Westinghouse strength, Cameco's own news dividend hikes. Good results, philanthropy reinforces that positive image.
What about indicators like short interest? Are people betting against it?
It's moderate. Around 4.38% of the float is shorted. Suggests some skepticism, maybe hedging, but not a massive conviction bet against the stock. Days to cover is around 3.
And technically, moving averages.
Strong positive momentum. The price at $72.70 is significantly above its 50-day moving average, which is around $60.61 trend.
Long-term trend, 200-day.
Also very strong. Price is substantially above the 200-day, which is sitting around $52. Powerful, sustained bullish conviction reflected there.
So what's the key insight from all this positive sentiment?
Well, while it reflects good fundamentals, the combination almost unanimous analysts love, glowing media, strong technicals, suggests a powerful market consensus.
Which can be a risk.
It can be. When sentiment is this one-sided, it often implies the good news is already fully baked into the price. It makes the stock priced for perfection, vulnerable to sharp drops if anything disappoints those lofty expectations.
Let's look inside the company now. Chapter 5, ownership structure. Who owns Cameco?
It's a mix. Institutions hold a good chunk, maybe 24–49%, depending on the source. Retail investors hold a lot too, and insiders have a small piece.
Top holders. Any familiar names?
Yeah, big players like Vanguard, Fidelity, also providers of those uranium-focused ETFs, like the Global X Uranium ETF, URA, shows broad appeal, both generalist and specialist.
What about insiders, management, board members?
Their holdings are actually minimal, only about 0.21% of the company.
Okay. Any recent buying or selling by them?
Now this is flagged as a significant note in the report. There's been consistent and widespread selling by insiders over the last 3 months.
Selling.
Dozens of transactions. Senior officers, board members, including CEO Tim Gitzel and the chair Catherine Gignac, we're talking millions of dollars worth of shares sold. And importantly, a notable absence of any corresponding insider buying.
That seems counterintuitive, given the bullish story everywhere else.
It's described as a stark contradiction. Now, insider selling can happen for many reasons, diversification, tax planning, etc. It's not automatically a bad sign.
But the pattern here.
The breadth and volume could suggest that management, while likely very bullish on the long-term business prospects, might feel the stock price has gotten ahead of itself, maybe reached full value, and they're prudently taking some profits. It's definitely something to be aware of.
Is ownership concentrated? Does anyone have control?
No, it's relatively diffuse. No single controlling shareholder. The largest institution owns just over 3%.
What about retail ownership?
It's high. Around 51% held by the general public or retail investors, often held through those thematic ETFs too.
Does that matter? High retail ownership.
It can contribute to higher volatility. Stocks popular with retail and thematic funds can see pronounced momentum swings. When the narrative is hot, money flows in, pushes the price up a virtuous cycle. But if sentiment sours, you can get forced selling pressure from those same funds, potentially amplifying downturns. Adds a layer of market risk.
All right, let's tackle Chapter 6, risk assessment. Maybe start with a quick SWOT. Strengths.
Sure, strengths are clear. World-class assets, those large, high-grade, low-cost reserves, the vertically integrated model, especially with Westinghouse, that fortress balance sheet, and experienced discipline management.
Weaknesses, internal limitations.
Main one is dependency on commodity prices. Uranium prices are cyclical. There are inherent operational risks too. Geology, equipment, labor, like that Inkai halt we mentioned. And geographic concentration, most core assets are in Saskatchewan, so vulnerable to regional issues like logistics, labor, or even wildfires.
Opportunities, looking ahead.
Huge ones. That generational demand from the nuclear renaissance, tripling capacity by 2050. The favorable supply-demand setup. New demand from AI and data centers. And potential from new tech like SMRs and maybe even their GLE enrichment venture.
And threats, external challenges.
Public perception is always a risk for nuclear. A major accident anywhere could damage trust. Competition from renewables and energy storage is ongoing. Regulatory and political risks. Policy changes. Taxes. But maybe the most immediate threat, given our discussion.
The valuation.
Exactly. Extreme valuation risk. That PE over 170 means it's priced for near perfection. Very vulnerable to corrections if they miss expectations.
What about macro factors? Inflation, interest rates.
Inflation pushes up costs, labor, energy, equipment. Higher interest rates are tricky. They increase the cost of capital, which could slow down new reactor builds globally. They also increase the discount rate used in DCF models, putting pressure on calculated intrinsic values.
Any specific geopolitical threats highlighted?
Yes, a specific and material one mentioned is the hypothetical threat of a 10% U.S. tariff on Canadian energy exports, including uranium, which was floated in early 2025.
How would that impact Cameco? Canada's a big supplier to the U.S., right?
Critical supplier, 27–40% of U.S. demand. The mere talk of a tariff caused uranium spot prices to jump 18% and U.S. utility buying activity to drop 50%. So lots of disruption and volatility.
And financially.
Could raise electricity prices in the U.S., and it might force Cameco to sell that uranium elsewhere, potentially on less favorable terms. It's a tangible risk.
So summing up the risks, what's the biggest concern for an investor today?
It might not be a specific operational glitch or even that tariff. The report suggests the most significant threat of this valuation could be a failure of the overarching narrative.
Meaning the story itself.
Yeah. The stock's premium valuation is so heavily tied to the nuclear renaissance story continuing smoothly. Anything that tarnishes that narrative, a safety incident somewhere, a breakthrough in competing tech, a major political shift against nuclear, could cause a rapid and severe hit to the stock's multiple, even if Cameco itself is running fine.
Okay, that brings us to our final chapter. Chapter 7, conclusion. Let's synthesize all this. What's the core bull case?
The bull case is strong. Dominant market position, unique beneficiary of a generational shift to nuclear power driven by decarbonization, energy security, AI demand. It's a cornerstone of the Western supply chain. Irreplaceable low-cost assets. Integrated model with Westinghouse, experienced management, fortress balance sheet funding growth, and dividends. It's compelling.
And the bear case, the main arguments against investing now.
Primarily, that stratospheric PE ratio. Little margin of safety, priced for flawless execution. Then there's that particularly concerning signal of consistent insiders selling a real contradiction. You've got the inherent commodity cycle risk and specific geopolitical risks like potential tariffs. But fundamentally, the valuation hinges on that narrative holding up.
In the valuation summary, where did our DCF land again?
Our educational model, even with optimistic growth assumptions, suggested an intrinsic value range of $55 to $75 per share.
So the concluding outlook. As of July 12, 2025, with the price at $72.70.
It sits right at the upper end of that estimated intrinsic value range. It strongly suggests the market has already priced in a lot of future growth and a very rosy scenario for nuclear.
Meaning
that while the fundamentals are undeniably strong, the current valuation seems to offer a limited margin of safety for new investors. The investment thesis from this point really hinges on whether Cameco can not only meet but significantly exceed the market's already high expectations.
So knowing that the market is pricing in not just solid fundamentals, but also this really powerful, compelling narrative, it kind of makes you wonder, doesn't it? Are you investing in a company or are you investing in a story?
Yeah, and what happens to that investment if or when the story hits an unexpected plot twist? Something to really think about.
Okay, before we wrap up, just a reminder to like and subscribe to the Stock Analytics AI YouTube channel. If you're a member, it's just €4.99 a month. You can add stock suggestions for future deep dives right there in the comments, and we'll definitely pick them up.
That's right. Over the next few months, we're planning to cover all of the S&P 500 stocks, and members get that exclusive priority access.
And hey, if you just want a one-off deep dive on a specific stock just for you, drop us a super thanks on the video.
And one final, very important note, folks. This analysis was generated by an AI system. It's purely for educational purposes. It should absolutely not be considered financial advice.
Please always do your own thorough research, or even better, Consult with a qualified financial advisor before making any investment decisions.